Hello friends, in this video I will show you how to trade round number levels with point O charts. Here I plotted point O charts, point original charts as you call those, or you can also plot this using Renko, rail to rail. Renko is called, but this is point O charts from OVO CZ, and we plot those according to the round number levels: 100, 200, 250, 400, 500, 800, 1000. So this is EURUSD. You see, there's a lot of range in EURUSD. It's very hard to make out where the price is moving, but if you use round number levels, you can see it better, much better. So this is for example, let's take a look at 400. You see, we plot candles along the 400 levels. Every 400, every 40 pips, the front candle forms according to the round number. And then you use another indicator to plot round levels. And here you can see where the price is going quite clearly. See, it's ranging between 14,400 and 1400. So it's pretty obvious here that we are going another 115 pips you can catch here, but of course it's a bit tricky with the stops, and for that you have to use higher lows or lower lows market structure to put your stops, because if you put your stop somewhere above here, of course it's doesn't pay out to lose 60 pips against 15 pips that you gain. It's a bit bad in terms of risk reward, because sometimes price can go against you and you will have big losses and small winners. So for that you can go to the like say 10 pips candles. Here we have 10 pips, the same. Let's like zoom in, and here you can see the price is making lower lows. This is the last lower low. It failed to make a high, so it's another confirmation that we are indeed going down. Here I put the trend line. You can see that we are moving towards, we are going to make lower low somewhere around 3600, and we look at 800s chart. 800s, it confirms that idea as well, because here you can see pretty obvious we are going to 13600. You see, it's very unlikely that price would go up here. Eventually will probably go up, but first we are going down. I think we are congesting here. As you see, we broke this lower low here, and typically when price breaks a lower low, it tends to congest. It ranges after the breakout, so it's kind of safe entry to target 13600. Thing is, the euro moves so slow that this will take a long time for the euro to move 80 pips. You know, it will take a long time. And if you are trading with a fund, you know, the swaps might be higher, so we can take it in 2 moves or 3 moves, this move. But it's kind of obvious. You don't see this on normal charts. You have to use point to O charts. And here the market structure is much better visible than elsewhere. Here you can see we broke the lower low. We might pull out back somewhere here, perhaps to 116 eventually, but we are gonna range a bit. At least I think we will make another candle down. That's my guess. But even using these charts, you can make good guesses. It will give you an idea, especially 400s and 800s, 40 pips candles and 80 pips candles. They are kind of accurate, and those levels work well with EURUSD and all other instruments. So don't use other indicators. It clutters the chart. You can see things like here you have the most important round numbers, and it's like 250, 500 is important. This is 500. You see, even in 500 chart, you can see we are about to hit round levels, and it's kind of safe. You see here, you don't even have any shadows above or below those levels. It's a kind of moves between round numbers. You can see that. So just a brief video for you to show how to trade round numbers. And it's important to know market structure. And I recently watched videos by Dave Teaches FX. It's a very good one when it comes to market structure. I recommend him. With him, you can even, with this strategy, you can even trade naked charts, DTFX. Check on him. And it's useful to know the information he provides about the zones and high highs and low lows, how he trades it. But this is a kind of auxiliary method. Well, you can use this to trade currencies and any instruments using this method as well, but you have to be careful with the stops. You have to know where to place them, because in terms of risk reward, when for example like here, when you target 15 pips, you know, and where do you put the stop? That's a problem of, you know, where the targets, you know where the price is going, but you don't know where to put your stop, because it can still range in this field above you. It can pull back significantly, and that's the point. For that, one needs to be good in knowing the market structure, and you can go to 10 pips candles, and then you can see if price is making high highs or making high lows, and follow the market structure. Like here, we know that we are making lower lows, and you can put stops above the previous highs. That's how I would do it. So just a brief video about round number trading. It's important in Forex. Forex pairs respect round numbers. It's also safe targets. It can tell you where the price is going. It also works well in crude oil. Crude oils move after round numbers as well, and it's kind of very great method, not visible on classical charts. You have to use 0.0 charts. This is the only chart which plots, you can plot candle after pip size, and there you can see the ranges. And you can really use candles after the round numbers. Those are round number candles basically. This is a unique way. Nobody will tell you this. So I wish you all the best. Be well.